Welcome, everyone. Henry Wheelwright, managing partner at Stablepoint Partners, sitting here with my longtime friend and partner, Chris Griffith, checking in with our clients as we always do. It's been a busy week in the markets. I wanted to get you up to speed on some of the key topics, things that have not only moved the market, but you're going to hear from Chris a little bit about some really important things that are coming down the line with tax and financial planning and things of that nature. So, first, of course, it's been weeks and weeks of volatility. We've been on a great run on the back of some important news on potential trade negotiations. On Monday, some news out of China. I think most have now been well informed. Over the weekend, Bessent was in Switzerland negotiating with China and trying to roll back some of these reciprocal tariffs that have been in place. So previous to what we got announced on Monday, we had 145% tariffs on Chinese imported products here in the US. That was obviously an escalation. And then we had a 125% tariff on US products going into China. Big news out of Monday is we're going to have that 90-day period runs through August 10th, Chris, in which they'll have more time to negotiate a permanent deal. In the interim, we have 30% on Chinese imports and 10% on US imports directly into China. Huge sigh of relief for the market. Been a very big rally, and I think probably a risk on, at least temporarily, in a lot of areas in the market that have been hard hit. I think what does it really mean is we are going to be in a period of uncertainty and volatility for the short term. The 90 days that we had to at least take a pause and allow the administration to negotiate on tariffs certainly has changed the mood in the market. And as I said to clients, we still stick by our original mantra of, managing to your financial plan, staying diversified. I'll give you a little bit of more color on why China is important and some news out of today's earnings from Walmart. Walmart, of course, is one of the largest US and global retailers. About a third of their products come from not only China, also Mexico. And most people were really trying to get a look at what impact had already been taken from earnings standpoint and sales from Walmart, and also get a sense of what Walmart was forecasting for the year. Earnings come out very strong this morning. They beat at the top line, did about 165 billion in revenue. More importantly, their e-commerce global business, something that was newer in the last few years, grew by 22%, becomes profitable. And we start to see a sense of the US consumer. Sales growth was still about 4%. They talked about the strength in the labor market, strength in their sales channels. And it appears that this is just reinforcing what we all know is that if we can get some trade deals done, we still have a pretty decent US consumer and healthy backdrop. Goldman Sachs came and reduced immediately their recession probability from 45% to 35%. Simply, confidence is beginning to improve if we have prospects of negotiation and deals. We start to remove the narrative from trade. We then focus on earnings. Earnings for the quarter, we were both really happy, came in much better than expected, 12% year over year EPS growth for the S&P 500. Expectations were around 6%. So our clients would say, hey, earnings are decent. Thus far, the economy seems to be fairly stable. We get some resolution on all the uncertainty on trade. Maybe we begin to start to think about much more of a productive framework for equity investing. So think about this week as another example of being patient, staying diversified, focusing on the big picture. Now, I tasked Chris with talking about taxes and planning. Why don't we talk about some of the big news there?
Yeah, we got the two big T's now, right? It used to be the three big I's. Now it's taxes and it's tariffs. So I get to jump on that sword today.
Thanks,
but
Chris.
It's good to talk about. It's really important, right? You talk about private wealth management, what we do, bringing into consideration taxes, estate planning, your portfolio. It all ties together. So there was some big news this week out of the House of Representatives on personal income taxes that will probably impact everybody watching this video in one way or the other. I'm going to focus just on two main points of what we have seen so far out of Congress with regards to taxes. There's a lot more to discuss, but the two big ones really to me were the SALT that we've been talking about for quite a while, state and local tax deductions, but also the standard deduction that may change going into 2026. Right. So again, keep in mind, everything we're talking about, nothing's laid into law yet. The House of Representatives hopes to pass this through by Memorial Day, at which point it'll go to the Senate and likely change, come back, and kind of probably get hashed out throughout the course of the summer, honestly. But what we're seeing as an indication of where we see things going forward, that we're going to see an increase in the SALT limit, currently $10,000 cap that got put into place 8 years ago. really a big impact. If you're here in Massachusetts, New York, California, high income tax states, this stung when that went into place years ago. And it's not going away. There's going to be a limit, but they want to raise that to $30,000 from 10. That'll be a big help for a lot of people. However, this is going to be income phased out, meaning when your income exceeds a certain level, you're going to go back to that $10,000 limitation. And we're going to see that fall that $400,000 of joint income for a married couple. You're going to start to lose that SALT limit. And by $500,000 or above of income, you're going to go all the way back to that $10,000 level. More to follow. A lot of people in Congress aren't happy with this. They want to see 50,000 or higher, especially some of those representatives in the higher tax states like California, New York, and here in Massachusetts. So leaving that, going to the standard deduction, this is a big deal too. This is going to go up a little bit to $32,000 for everybody. But if you're 65 or older and you're watching or listening to what we're talking about now, this is a big change where you're going to have the potential for an additional $4,000 per filer added on to your standard deduction. So as we saw it and we understand it today, that could give a couple that's both over the age of 65 a $40,000 standard deduction. But here's the kicker. Like everything else that came out of Congress, it's all tied to income. So at $150,000 of AGI or adjusted gross income or above, you're going to lose that extra standard deduction.
Right.
So here's where we're really seeing the planning opportunities with your portfolio, with the potential kind of guidelines that we're seeing from the new tax regime coming into place next year, is around things like Roth conversions.
Right.
If I'm a couple in their 70s, I have a large retirement plan balance, I'm going to be over that $150,000 threshold right away. Do we look at converting assets to Roths this year to hopefully free that up in future years? It's too early to be doing this yet, but this is a great third and fourth quarter conversation around things like this. So what can we do in 2025 to be ready for the new tax code in 2026 and make it work best for you? But again, that's why we're here, right? At the intersection of investment management, income tax management, estate planning, it all speaks to each other. It'd be really great to have a discussion around that, later this year. But those are the biggies of the week: taxes, tariffs, and on to more exciting things in the weeks ahead. So I don't know, Henry, if you have anything you want to add.
Appreciate it. Great job, Chris. I think the big takeaway, great opportunity to re-engage with our team. This is where we get to shine, give you advice, counsel, and we appreciate the trust and confidence. So we'll look forward to next week sharing some tidbits. Appreciate the trust and confidence. Have a great weekend.
Thank you.